Good afternoon, ladies and gentlemen, and welcome to the EQTEC PLC 2021 Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via Investor Meet Company dashboard and will notify you by email when these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to David Palumbo. Good afternoon.
Thank you very much, Alessandro. First of all, thank you very much for everyone attending this webcast. We would like to use the opportunity to give you a refresher of the business of EQTEC and where we are in the growth, and we expect this to take 20 to 25 minutes, and then we'll proceed to answer anyone's questions as much as we can in the given time. Just to start with, our target business model at EQTEC is a clean technology innovation business. We're IP-rich, know-how-rich company that our main business is to sell technology solutions and innovate in the space. So our existing assets are, the capability and know-how that we have going back to 1997, all our patents, the versatility of the applications that we can use our solutions, and the operational availability that the plants using our solution have. This makes the commercial viability and the business case for each of these applications very interesting. It's a business that is profitable in terms of the plants that it can be deployed right now, and is interesting and profitable for the application today. The future end game, or where we want to be to generate more value in terms and be able to scale much quicker, is in the licensing and service business. But to get there, we have to build not only the integration and the know-how capabilities in the market, but also define the market and everything that all the process that takes that are required to take a project to not only a technical but also a commercial viability. So what is the journey that we are going through now is to develop more market access, and we're doing that, and we'll discuss more about how we're achieving that through local go-to-market joint venture, more footprint and certification of plants built where we have external validation of the output of our technology, improving also the digital configuration. So the end model that we want to have is where we certify third-party companies or EPCs or strategic partners to deliver and to deploy our technology in a way that we can distribute our technology digitally. That's the end game. That's a little bit, to use an example, would be like when you buy Microsoft Office or when you buy Salesforce, you don't have a Microsoft employee deploying the technology. You have a reseller, a certified reseller for either Microsoft or Salesforce or an equivalent. So we want to be like the Intel inside of the gasification world, where we can provide this sector expertise in the form of our patent and know-how, and be able to project that in the market through partners. Another thing that is important to achieve that is access to data. All our plants collect the operational data from temperature to pressure to composition, and all that data from our plants, it just improves the know-how in terms of predictive maintenance, and we are now looking to develop more in the context of industrial IoT to be able to improve and continue have the design of a plant and new solutions to be always at the leading edge of technology. And also now what we have been involved a lot is to be able to be involved with lobbying groups and to make the most of the spotlight that is in the sector given COP26, around the corner in the UK, and being able to be the expert voice that make reference of what is achievable in the market with that technology. It's important also to say what we are not. We are not an owner-operator of plants. We are not a developer of plants, although we may need to be involved in that process now to be able to define the market and to make sure that the strategic partners as we're building are up to the quality that we require them to be, but also up to the know-how to be able to scale rapidly. As a value creation is much more important for us to deploy technology much quicker. As a technology company, will accrue a much higher multiple valuation than just as a owner-operator of infrastructure. So our business model is important that we keep it as it is, which is capital light in terms of investment not in infrastructure, and also quick return on investment in terms of how we deploy our capital, just to capacitate and to certify delivery partners on each of our key markets. So in the current business model, as I say, the whole life cycle of a project, I think it's important to explain this. All the work that has been happening in the last year is mainly on the pre-financial close work, which is the development phase. So this includes the business development phase, which is the opportunity incubation, where you qualify the opportunities that come to you through a developer or to a industrial client. And we look at all that configuration, what is the optimal technology configuration for achieving the best economic result. And then the other very important work, once you set up on that configuration, is the whole project development, which is the delivery readiness. That all of that work needs to happen before financial close. At times in a market that is so still immature, like energy from waste, particularly with the early gasification technologies not being very successful on delivery, you have the readiness of the project. It's much more dependent on how well developed and mature this delivery post-financial close is than finding the capital itself for financial close. So for us, it's important having the interest and the demand on the pipeline that we have created, that we're very careful and should choose which projects we will bring forward to financial close to be able to use them as a template, both to develop the market and to develop our partners. The business is set in such a way that we get paid development services fee at financial close at the latest, but as early as we can. So a perfect example that we described the transaction where we sell the majority of the SPV to a listed natural resource company like Kibo Energy, and the intention is as soon as there is demand of that SPV to be someone else taking the development risk, this is the moment that we can transfer the ownership of the SPV and we can build our development services, or accrue interest in development services. Development services are very high margin, revenue stream for us, and also de-risk the project to still take it to financial close. As I mentioned before, it's very rare that the same developer is the owner-operator of the plant or necessarily needs to be involved in the financing of the plant. Post-financial close, these plants are usually owned and financed by large infrastructure investors, could be private equity looking into energy transition infrastructure, or owners-operator of either waste or energy infrastructure. At that point of financial close, we sell our technology or solution to the project, so the SPV already capitalized, start paying milestones for us to sell, doing construction and commissioning, for our technology. And post COD or commercial operational date, when the plant operations start, then another revenue stream kicks in, which is the maintenance or management of the assets in some shape or form under the commercial operator of the plant. Again, so we are always subcontracting our services, either at the beginning as delivery project development services, in the middle as solution provider, and on operation as maintenance and management. Our intention is not to own capital in this infrastructure, and this is designed like that. This is part of the strategy so we can innovate and grow much quicker and deploy more plants globally. As we grow the ecosystem of both the capital investors, both from development and from the infrastructure, and better delivery partners, we can shrink our involvement more and more just on the technology innovation and engineering and maintenance, and continue to innovate and to deliver new products and new applications. You know, as I say, we are very much focused on thermal and electrical. We are already looking at biofuels. We are already looking at hydrogen. But this is something that every iteration of this model is profitable. It provides good results to the company. It's capital intensive, low, and creates stacked value on each other of the iterations.
And just to add to what David's saying, I mean, and to clarify, when we say shrink, we're shrinking the scope of our focus from what he's outlined here across the entire life cycle, so that we can focus on the technology innovation, the technology deployment, and the quality and of the plants that are running with EQTEC technology in them. That, because of that, as David said on the first slide, will allow us to grow tremendously in terms of revenue and so on. Just before we move on, I think this kind of life cycle that David's walked us through gives us a very good baseline for understanding the evolution of EQTEC as a business as well. You know, we announced in our interim last year in 2020 a lot about pipeline, and we followed that up in our Q1 trading update in March of this year. And we were naturally commenting on what we were doing around opportunity incubation, therefore the business development. What we then began to talk about as early as March, but also then in our Q2 update in July, was how many projects we were beginning to develop. And of course, as we reinforced again in our interim report just this morning, it's that we've been investing in that project development, in part so that we can move more quickly to financial close, but critically so that we can maintain our brand through the quality of what gets done up to financial close. If we get into construction and commissioning with poor quality project readiness, there is very little we can do to recover that. And those of you familiar with this industry will know that a lot of projects fail because of a lack of preparation prior to contract, not after and following contract. So because of that, we have spent time and effort and indeed investment in ensuring that the quality of what we're putting forward is excellent, so that EQTEC as a technology brand lives all the way through the life cycle and indeed through the lifetime of the plant itself. If we then move on and we look a bit about, therefore, the strategy, which is effectively a plan for how we get from what Dave has just outlined, how do we get to our target model, that of a licensing technology business focused on innovation and constantly pushing the front edge of the technology capability. How do we get there from where we currently are? And what this tracks is even how far we've come so far. So the little triangle you see on your screen is kind of an indication of roughly where we are in that journey. We've been through startup phase, which was a lot about developing financial viability and stability, which we believe happened back in 2019 going into 2020. We developed some anchor projects that you will know about because we announced them last year coming into this year. But of course, we were operating with a very strong technology team in Barcelona and a very scattered and very small corporate center team, and therefore business development team, in Ireland and the UK. Moving on beyond that, as I said, we started to push on pipeline and incubation of opportunities and growing interest and awareness, and we had very good success with that, as you'll know. We announced back in March that we had 75 deals in the pipeline, and we continue to grow that pipeline. The interest and the demand is without a doubt continuing to grow. But then the focus becomes a little bit different, and we focus less on growth in the pipeline and just opportunities, and we now need to convert those opportunities into real projects where we put expert project developers, we put subject matter experts from waste to energy, we get delivery partners actively engaged, and in some of our larger projects, we're getting tier one EPCs involved, and we work together with them to get that quality of delivery readiness in place. So by the time we get to financial close, by the time we're contracting, we can ensure that that quality goes right the way through the delivery of the plant, and then of course the commissioning and the live operations of that plant. So we're now focused beyond that into deal growth. It's about how many more opportunities can we convert to real projects, and how can we work with the right partners. Because as David was mentioning on the previous slide, we need an ecosystem of partners, go-to-market partners, many of which will become joint ventures. We also then need delivery partners, EPCs and others. We need a pipeline of investors. So we have a growing pipeline of interested investors who want to fund projects with us. So as we build those in and we build the skills and we bring more talent on board, we've been investing. And particularly in the first half of this year, as we said in our interim results, we've been investing a lot in bringing that capability and talent on board and those partners on board to help us drive this next phase of our growth. As we do that in the various markets that we're currently targeting, we then start to mature that ecosystem. And that ecosystem eventually becomes a series of distribution channels for our technology, to a point where our JV partners can not only have their own networks in their own markets of delivery partners and others to help them, grow the capability, but they become channels through which we can license our technology, certify, as David was saying earlier, those who can do the on-site maintenance where required, where we can't do it remotely on-site. The last thing I'll say before we move on is underpinning all of this is our commitment to becoming a digital business. And that means both deploying industrial IoT and other digital technologies as part of what we do out of the box, out of the proverbial box with our technology, but also even to componentizing and prefabricating, commoditizing our plants so that they are what our CTO, Yoel Aleman, calls cookie cutter, so that we can replicate those rapidly into many of the markets where we go. The magic of what we do is not in the kit we manufacture per se, it's in the end-to-end process knowledge we have, the end-to-end operating knowledge we have of how the plant needs to run, but then also beyond that, end-to-end understanding of the commercials and the economics behind the application. That is very difficult to replicate, and it's something that we therefore need to put into everything we do. And if we can find a way of creating that out of the box, IKEA style, then we can replicate that much more rapidly around the world, and that's where we intend to go.
Just to add to that, it's important to understand that it's not only the technology that we're looking to be able to compartmentalize and make a product that is deliverable in terms of that template. We're creating the business template as well for the joint venture. We created the business template for the market development center. So you will see, we announced the market development center in Italy. We announced another one in Croatia. Those are building blocks for being able to then upskill local partners, both use this as a sales strategy and distribution strategy, but also to use a place where you can see the technology at commercial scale working, you can see the technology operating. And the most interesting thing of all of that, we are not doing that on a balance sheet of a cost that is just a slow-moving target. It's a cost to have an R&D center. We're doing that in sites that are commercially viable, highly profitable, where return investment within 12 months of being deployed in the capital. And that's the model that we need to be able to be agile and move quicker. We are, if you look at the last 12 months, and how we are confident to say that we are in target to hit the revenues, even if the first, two-thirds, the first 9 months of the year. The first 9 months of the year has been exactly that. We have been spending as executive director in Croatia, building the capacity for the local partner. We spend the time in Greece building the capacity for the local partner, understanding, the EPC contracting, who's going to be there. So then, in the last quarter of the year, we have, half of revenues we expect to come around development services, which we are already contracting for that, and they have already been delivered, so we can recognize those revenues as well. And then the other is about deploying and testing, how quickly, by having done the work of creating the platform with our partners, how quickly we can replicate and deliver and invoice those technology sales as well. And then this will drag on to next year as well, and you have the secondary, the ongoing revenues coming from the technology sales. And as we move forward, we'll see the technology sales will increase in the makeup of our revenues, but we still see the development services to become a recurrent revenue that happens as we incubate the process. We're incubating at a profit, and then as we operate, we'll see towards 2023, we will have a very clear distinction of different revenue lines that are growing, all of them and adding, stacking the value one on top of the other.
So let's move and talk about each one.
Okay. Thanks, David and Jeff. So we thought that alongside the strategy discussion that we've been having, we wanted to take you through that journey and then move into where we currently stand from an H1 perspective. So as Jeff mentioned earlier, there's a growing conversion of the pipeline which is currently happening. Our pipeline seems to be swelling, but we want to make sure that we are pre-qualifying the parties that we are working with. We're pre-qualifying the opportunities that we're working with. So all the opportunities that come through this pipeline are actually quality opportunities that we can deploy our technology in the way that we want EQTEC to do the business going forward. We've been talking about the financial flows that have actually been achieved on the Market Development Center, which is in Italy. These Market Development Centers where we are actually taking minority equity stake, but showcasing our technology in those markets as to what can actually be done. If you have a pilot in certain jurisdiction, people look at it and say, well, it's good to have that, but they would also like to see it operating in a commercial setting. And that's exactly what the Market Development Centers are going to do for us. There have been an increased amount of investment into the joint ventures and having the expert teams to make sure that we actually incubate the capability where our markets are. We want to make sure that we, first of all, before we enter into any discussions, we qualify the parties for potential joint ventures. Once we go through that process, we want to make sure that we have the capability to both develop the business as well as do the exact tasks which are necessary to bring the projects to financial close and fruition. So we have been kind of investing throughout the first half of the year in those capabilities. You all have been part and parcel of the placement which you would have seen. It was oversubscribed. We had a lot of confidence from the investors, which was clear that people believe in what EQTEC does, what EQTEC wants to become in the future, and the journey that we're currently going through. There have been a lot of engagement that we've been having with the policy makers to make sure that we are pushing boundaries on the technology front, but we also want to bring that conversation from an overall industry perspective as to how we can help decarbonize the economies along our key markets. We are also talking about potential sort of aspect or levers that different governments can actually deploy to ensure that the technology is well supported and it helps us achieve the objectives that we want to achieve with this technology. And then last but not the least is we are definitely forecasting and targeting towards significant growth compared to last year revenues. As David has been suggesting, a lot of work has been going on in the first half of the year to make sure we have the MDCs in place, we hire and retain the right talent, we incubate the JVs and the capabilities related. With putting all the right infrastructure, we are able to then monetize on the potential revenues that come along and hopefully deliver the growth this year.
Yeah, and Duman, when we talk about the place in the 60 million, it would be interesting also from you that recently joined. I feel that you've been in the company already for about 3 years. How effectively and efficiently we're deploying the capital on the targets that we say that we will do on the placing. How we went into the Market Development Center, how effective we'll be doing that.
Well, that's a very good question there. First of all, obviously, and for everybody's benefit here, we always want to make sure that we remain asset-light business and more technologically focused. So whenever we are actually investing into projects or investing into JVs and project SPVs and so on and so forth, we always look at what is absolutely needed from an equity stake perspective that we need to invest. Secondly, we always look at very closely around what sort of technological solution that we can actually deploy and how we can optimize returns. So we are trying to make sure that we get more return from the investment that we can. And last but not the least, whenever we are recruiting and hiring talent, we are very cognizant of what level of people we are bringing in, and because we are at a certain path of our journey, you need a certain skill set and certain seniority of individuals to actually help push that target forward. So these are the kind of some of the factors which we obviously we make sure that we look at.
Great. Thank you. Okay, so I think it's all good to us to remind ourselves. Sometimes we don't do enough internally as well in EQTEC. It's where we're coming from. As everyone knows, that the year 2019 when I joined as a CEO was a year just to bring stability and credibility with the investment community, clean the capital table and the restructure the debt of the company. We are a company now that have had a significant growth from 2019, and it has no debt. There's no venture debt, there's no type of debt. We have minimal facilities of debt, just as a trade with banks. So, but already from 20 to 21, you can see a significant growth. We had one project under construction. We have now 3 projects under construction, and obviously we expect to have a few more by the end of the year. Project under development, we went from 8 to 17. Revenue, we had in 2020 2.2 million. We're targeting 15 million this year. We were in 3 active markets. We are now in 7. We have no joint venture. We have a couple of collaboration agreements in 2020. Now we have 2 joint ventures, and we expect to have probably another 2 by Q1 next year. We're targeting, Ireland. We're targeting Italy, Spain. So that's crucial, because the joint ventures are already proven to be an incredible source of not only projects but also partnerships, profiles, etc. Market development centers, we have none, and we now have 2. We probably targeted another 2 more, by Q1 next year. In terms of technical center employees, we went from 12 to 15. This is the core engineering, the crown jewels of the know-how, the IP. I mean, we need to scale this, so we are looking also ways to scale the non-core engineering. We have a couple of very exciting, interesting initiatives of how we could scale the engineering capability quickly. But also in corporate center employees, we were 5 people a year ago. So if you think about the amount of corporate activity and funding and transactional, and designing the business, the reach that we have is very, very efficient. And we moved now from 5 to 15 full-time corporate center employees. So that really shows you an idea of the momentum. I mean, we are a growth company. There's no, we all come. I mean, the executives on this team come from much larger business, much more established business, and we bring in all that discipline early on of what is required for a fast-growing business. But let's not forget, we're a growth company. The momentum that we have is incredible. So we already want to judge ourselves as, PE ratios or, earnings per share discipline. But, we have a market, we have an untapped market that is huge. We are not even targeting opening some of the geographies that we could be. The biofuel market, the synthetic natural gas market, the hydrogen market. We are very disciplined to make sure that we deliver the base to which we can scale and keep in the next few years having the growth in revenues and pipeline that we are targeting now. For us, everything is to invest now. You think about companies like Amazon. Amazon took 14 years to become profitable. Tesla, 18 years. And that's how you should be as a technology company. You should continue to innovate, reinvest, and be able to scale. So then you have a head start and a position in the market that is very hard to compete with.
Yeah, it's exactly what we've been communicating. It's disciplined growth, but we're not spending a lot of time doing big, cost reduction initiatives. That's not where we are. Given where we are, the overriding interest that we have is on revenue. Just to comment on the last 2 lines on this. If you look at our pipeline and what we're forecasting over the next 3 years, and we're in the process right now of updating our 3-year plan from last year, and it's a surprise because we've grown much more quickly than even we expected, which I think is quite common in businesses of our size and maturity. But as we update those 3-year plans, we also look at 3-year forecasts. and we tag the capacity we require from an engineering, but also from a business development, corporate center type perspective as well, in terms of delivering that growth. And if you look at the number of engineers we need, it is not a small number. As David said, it's not just about the relatively small core of real chemical engineers and gasification experts and process engineers, control systems engineers that we have in Barcelona in our technical center. But beyond that, we need civil engineers, we need mechanical engineers, we need electrical engineers also to do these work, and we need them in quite large numbers. So as we map that through, as David said, we really do have to pay attention for how we're going to grow that engineering capability. We've got some very good plans in place for how to do that we hope to announce. In the corporate center, which will grow, slightly more slowly, of course, than the engineering capability will, we nonetheless have to grow that business development capability. But the real focus needs to go to the markets. And that's why building the joint ventures that we have becomes so important, because in effect, they become the business development engines, outside of our core markets. So just to give a bit of a hint going forward, and some of you who are online and look at our social media posts and so on may have seen this. But as we think about scale, we've already told you several of the things we're doing in terms of planning that capacity, and setting up the joint ventures and building the market development centers and so on. But what we also have recognized is that we're not simply playing a one-size-fits-all, business model for what we're doing. And when I mentioned earlier, for example, what the CTO talked about in terms of the cookie-cutter approach to the engineering, we have to start to look at, you can't take a small biomass facility and suddenly turn it into a large-scale, RDF or MSW type facility. And so what we've started to recognize is there are roughly 6 areas that we're currently targeting to play in, 5 of which we're already very active in. So we talk about the community cooperative model, which is very much about building small modular plants where the feedstock is located. And so in the case of Greece and Croatia and Italy, that is predominantly going to be in farming communities where there are local cooperatives who can pull together the feedstock from local farms and bring it to us. In the case of Italy, for example, we're arranging to have daily deliveries of the feedstock, which shows you how closely linked we are with that local community and the local farms there. And of course, in return, we provide power and possibly in certain instances heat or other offtake to that local community. If we look into some of the other areas, we look at California, for example, the proposition there is very, very different in a way, because it's less about the energy offtake or the offtake and the energy, generation, and much more about the feedstock collection. One of the biggest causes of the forest fires is forestry waste, the dry brush that gets left behind. As that gets accumulated, again, we can build in the forest areas where that feedstock is located, collect it from the local areas and bring it together. The pipeline that we have now in California is quite significant. And as we, complete the North Fork project and we move ahead there with other plants, we will build a distributed set of plants whose predominant role is the prevention of forest fires. The energy that we can generate, or indeed the biofuels that we can generate from that, will be an added benefit of a much larger focus on forest fire prevention.
It's probably worth mentioning as well that that's a very similar situation that you have in Australia, for instance, which is a market that we are not even looking at in geography yet because we don't have the delivery partner. This is a market that is happening. We had a lot of forest fires now in the Mediterranean as well this year. We have forest fire in Southeast Asia. And also another thing that we've seen that is transferable from the experience in California is the California has a very established market for biochar, and not only for the use of biochar into the soil, but also similar, we see that happening now in the Europe as well. And also the carbon credit for biochar is a very interesting market. So all these things are transferable to geographies as well as applications.
So those are 2 examples, but the high volume, large scale we're doing with RDF in the UK, the syngas refinery type model that we're beginning to explore with our partners in Ireland for production of synthetic natural gas, the energy transition that we announced in these interim results for France, which is getting very, very active in this area. And then the last one, where we we have had a number of conversations, but we have no active projects yet, which is building on-premise on industrial facilities. All of these are areas, and they're more than simply concepts. In the future, they become those cookie-cutter designs that, from an engineering perspective, we produce. They become, in certain instances, prefabricated plants, or at least significant parts of plants that we can make. They become, as David was saying, business models, business cases, financial models, that all of which are targeting very similar outcomes that we can then take to market. So this is the kind of thing that we're starting to explore to help support our growth and scale in 2022 and beyond. I think we should hand over the question.
Yeah. Thanks, Mike. So thank you everyone for coming to this webcast. I mean, we would like to commit to do this more often as well. I mean, not only when half-year results or full-year results are out, and you know, as you guys can probably see, we all three of us can talk about the business for days.
David, Norman, Jeffrey, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. We received 2 pre-submitted questions from investors, and I want to start the Q&A with these. The first one reads as follows. Are the company's predicted 2021 earnings on track, i.e. circa 15 million euros in revenue?
Okay. Well, I think what I would say to that is we very much are on track with so many initiatives in the background to deliver what we set out to deliver in the beginning of the year. We have been literally looking at all the risks. We have been mitigating the risks as we go along, reducing the uncertainty around the revenue piece. So we are fairly confident, but obviously all of these things do rest on certain things happening by the year end, and we are all hands on deck to make sure that we actually deliver those things.
Just to add to that, this is the important work that happened at the beginning of the year. We believe that we'll achieve that because, let's say, most of the revenues are split between development services, which have already been delivered, and as soon as we change the ownership of the SPVs, we can recognize, and the other ones are to technology sales or projects that we are doing under the joint venture. So if you think about that, how is that? Seems like a large number of in terms of revenues. It's coming from 6 projects, and it's coming from 6 projects which we have an executive director on each 2 projects, just making sure the execution. The risk that you have in this is execution risk. Is delays on we don't have a commercial sales risk. We don't have necessarily even a funding risk. It's all about execution on time. We see a lot of that coming between October and November this year, and we are working, and we have everyone from the executive down in the company motivated, committed, and incentivized to be able to deliver what we said we will deliver.
Yeah, and if I may, I mean, this is not a surprise. This is the same number we had at the outset of the year. We have consistently announced in our trading updates that we knew this year is backloaded. If you go back to the life cycle that we shared with you on this call, it's very clear why that is. It's very much about getting that work done up front, assembling the right players, driving this thing through to financial close. And so therefore, quite naturally, that work, as David has alluded to, had to happen in the first half of the year. We're very pleased with how it's happened and how it's been set up. We're very pleased with the quality of the teams we have working on it. Now we need to see that come back through, of course, at the back end of this year, and we have confidence it will.
And the last thing to add is to mention, we are at the stage where as a company, it's all about the momentum. We will fight tooth and nail to deliver 7 times revenue. But if we will disappoint the investor, we will be by delivering 5, 6 times revenue, which is a good problem to have. So the point is, all those projects that we have by the last quarter of the year are our projects, and they are funded, and they're going ahead. So if we miss one or two for Q1 of next year, it will just continue to build the momentum on the execution. So we are all chips in for the big win, and we're told that we can achieve that.
That's great, thank you. The next question reads as follows: with COP26 starting on October 31st, being next month, what marketing campaigns are in place to showcase EQTEC's technology to the world?
Well, if I may start by saying that the single biggest marketing campaign, if I can put that in quotes, for us is execution. So what David was just saying about, all chips in and delivering the results this year and going into Q1 and beyond that Q2 and driving the growth that we've just said is the best way to prove the value of what we do. Let's remind ourselves that we are advanced gasification in a sector that has traditionally not proven to be commercially viable. We are commercially viable. We know we're commercially viable, and we are in the process of proving that again and again and again. The more we do that, the better the marketing for this is. But I think it's also important to talk about how we engage with policymakers, because that needs to be on their radar as soon as possible.
Yeah, and we plan to be at COP26. We'll have got a couple of invitations from our strategic partners, and we'll really look forward to. If we can find an hotel room there, we'll definitely be there.
Thank you very much. That deals with the pre-submitted questions. Investors have submitted a number of questions during the presentation today, and I wondered if I could hand back to you to respond to those where it is appropriate for you to do so. Could I please ask you to read out the question and then say who it is from? Thank you.
We are not seeing the questions on the Q&A, so if someone can read them, we'll happy answer the one that we can answer.
Okay, so I can read them out for you if you want. There's a question from Michael V. It says, in the next 6 to 12 and 18 months, how many plants do you expect to get to the plant operations start stage?
In the next 6, 12, and 18 months, let's talk about year-end 2022. It's probably easier. We expect by year-end 2022 to have Italy and Croatia built, also probably aggregates and Norfolk, and there may be a couple of wild cards as well that they come to. Okay, we'll see the question now.
Yeah.
So by the end of 2022, we are committed to have Belize and Italy built, probably also Norfolk and aggregates should be by mid-year as well. So we expect to have by the end of 2022 probably 4 plants built and operating.
Okay.
There's another question, Adam F. In terms of acting as a developer to define market, do you have a ceiling in megawatts on non-project development? I can answer that one. The ceiling of megawatts, we can make gasifiers at any scale to from 1 megawatt or half a megawatt all the way to 10 megawatts, even 12 megawatts per gasifier. If you look at Billingham, we're designing on 3 9-megawatt gasifiers. So I think that the limiting of the size of the gasification unit for electrical application is not the technology. I think that the upper limit is about market demand. And I think that the trend is moving more to smaller localized plants, which is what we can do that incineration cannot do. Is doing 5, 10 megawatt plants more localized, and I think that's what will drive the scale of the plant that we develop. It's more of we are very much surprisingly in technology companies, we're very much market driven. You need to listen to the market, see what the demand is, and that's where we're addressing.
I can answer the next one. It's about, can you touch on the expected pipeline conversion rate and the average sales cycle for deals, which I take to mean the distance between incubation and financial close, or the time between the two. This is something that we're working very hard on. I think it's fair to say one of the problems that we started grappling with 12, 18 months ago was that we were seeing very long cycles, by which I mean there was no bounding around that. Now, in this industry, which is the construction industry, in any kind of infrastructure project, I think what you'll find is people are hard pressed to answer that question. But one of the things that we're trying to bring to this is the disciplines that we've seen in other industries. I come from large-scale IT implementations, global IT implementations, for example, and we do want to start to bound them. So as we start to put in financial close dates and we negotiate and we discuss this with our own people and with partners, we are starting to pin that down. We would like to see, even for the more complex, harder to negotiate deals, it falling well within a year. But right now, I would say for the larger, more complex one is probably 12 to 18 months. For some of the smaller ones, we were talking with our partners in Greece recently, even on the smaller ones, the time it takes simply to get an environmental permit, which is critical, could be as long as a year. So with that kind of lead time, what we have to try and find is how can we put in more influence, but also much better management to close those things down. So I'm afraid there's no mathematical hard and fast benchmark, but I think bringing it within 12 months is definitely our goal.
Yeah, and just to add to that, obviously we have a very diverse pipeline of projects that have been already incubated and maturing. So the important thing is to distribute on that period enough projects so you reach a point where you have the capability to close a project every 2 months or less, because you can close multiple projects at the same time. So
and that's what the discipline is so critical.
So a question for Richard is you restated today that your 50 million revenue target remains steadfast. Do you think this JV investor future revenue being sufficient to form business as usual? Essentially, you're seeking to understand when the business will be self-sustained in the ordinary course of its activities. Again, this is I think there's two sides of this question. One of them, what we are accelerating and improving now with our momentum is that there will be more and more investors at the development level, at SPV level, which makes our deployment of capital even more efficient. So we'll have our capital in project incubation looking for less time. That will also have an impact how we recirculate that capital and how we redeploy it again. And in terms of when the business is self-sustainable, again, this is a choice based on how quickly do you grow. For us now, it's all about how much investment we make to scale quicker. And I think the answer to that, you need to have an ear on the market to see when that is. We will always use the most efficient way, our balance sheet and our capital to be able to, take the best required to dominate the market that we want to operate. So the good thing is we can dial that up and down as and when we need it, and we decide that it's advantageous to the company.
Okay, I can take the next from Arun, who's asked, do you provide the current and future clients a business model with expected profits once the plant is fully operational to encourage them to adopt your technology? Yeah, Arun, I love this question because it really points to one of the things that makes us so different to some of the other players that we see out there. We look at, as I mentioned earlier, not just the end-to-end process of the thermochemical process of gasification and how it operates in the plants. We don't just look at the end-to-end operation within the plant, which includes all the ancillary technologies. We look at the business that the owner-operator is ultimately going to own and operate. And we look at the commercial modeling behind that. We've identified the 5 really key value drivers, but we also have very complex commercial models that we put in place. And we will run a range of scenarios. On one of our bigger projects, such as Billingham, we've run as many as 20 different scenarios, changing the variables to try to get the best possible IRR from that commercial operation. And that's over the lifetime of the plant, as well as through the project of the structure and commissioning itself. And so when we factor that together, you can imagine when we go to market and we look for investors, we have a much more sophisticated pitch to them than many others have, because we're not pushing our technology or pushing equipment. We're having a discussion about the full commercial model. So one of the things we're very proud of is that understanding of how we look at the end-to-end commercials of anything that we sell.
Next question, Sean P. EQTEC is a much cleaner way to compare waste than all polluted incineration. Why do we not see you pushing the health benefit more so that you can sit in common? And the answer is we at the moment incinerators are the lesser of evils in terms of compare with landfills. So we like to just be able to make statements that when you see the emissions of our plant and when our clients are coming to us, the case is made already. There's no point for us, we don't go out there commenting of the negative impact of incineration or the competitors not being able to achieve operational availability. What we just go out there is focus on building plants. We have more demand than we can address. And eventually, it's more important for us to make that point to policymakers, which we start doing, and to environmental groups and focus groups. So that starts changing the policy, and we start more rewarding incentive for carbon efficiency and not toxic emissions, instead of just going out to the market and do some arm waving and say we are better than the rest. I think this is a discussion where we need. COP26 will be very interesting to put that information in front of the right eyes that can influence policy.
I think one of the questions that we have is, are you currently looking to either merge or out any of the business that will complement EQTEC future development? So what I would say to that is, because a lot of the part of the question remains, the details remain confidential, but we always keep on looking at opportunities and potential value drivers that we can actually bring into the business to scale up our capability, because we are building a platform for growth. Whether it is related to a certain kind of engineering capability, whether it's digital, whether it is other things, we always keep on looking at those things. So yes, to answer your question, we would always look at those opportunities, and we do look at them very carefully. And going forward as well, as and when the necessary details are available, we will certainly go out to the market in that regard.
Yeah. And the final question we have here is there a plan in place to reduce the number of EPC contractors involved in project delivery, or is this driven by the location of the project? I mean, quite the contrary. Right now, our plan is to grow the number of EPC contractors with whom we engage. We already have very good EPC partners in Greece, of course, in Italy, and they deliver for us across multiple markets. We're building relationships in the US and, of course, in all of our target markets, including the UK, with EPC contractors. I think it's something David alluded to earlier. What we now need to do is select the EPC partners that we want to be permanent members of that ecosystem that we're building, qualify them as being high quality, certify them as being able to work with EQTEC technologies, and then work with them to become partners who can also take up the market in other places. Some of the tier one EPCs that we're talking to right now are interesting, not just because of the quality of the work they do, not just because of the breadth of their vision, but also because of the breadth of their global network. And so they will be able to take us into markets where we would not be able to go on our own. And so the plan right now is to grow the number of EPC contractors we're involved with, but we will always be ensuring that the ones we work with are reliable and can help maintain the quality of the EQTEC brand.
Yeah, just one thing to add to that as well, because I think that's been commented in the community sometimes as well. When we talk about tier one EPCs, just because you are a tier one EPC doesn't mean that we want to work with you. And the reason of that is because we need to understand, and this is what we're talking to a lot of people that are progressive, moving away from fossil fuel for the process engineering of oil and gas, because we want this transition to be existential for them. We want people that are really committed, or EPC tier one, that are really committed to this path, so then they involve and invest the resources required to integrate the EQTEC technology. And that's more important than anything. There's also a notion in the market that we're going to get like a big engineering company as our partner, and they're going to finance our pipeline. These big engineering companies and big EPC, their business is very clear. It's selling engineering capability and selling procurement and construction services. So we are a client to them, and then eventually they'll become our sales channel. So that's when we say that we qualify EPC. We also qualify the intentional and strategic alignment with tier one EPCs as well. And we have, there's many tier one EPCs that we have happily agreed to not work together.
Indeed.
Thank you for being very generous with your time there. I think you managed to address pretty much all the questions from investors today. And of course, the company will review any further questions submitted and publish responses where it is appropriate to do so. David, just before redirecting investors for feedback, I wondered if I could ask you for a few closing comments.
and the commitment for investors that have been with us for a very long time, both institutional and the retail investors. You know, we have a very active investor community on the retail side as well. You know, there's incredibly well-informed comments that we see sometimes, and we will make a commitment as well to explain and to, where we can, spell out much more what we are doing as a business and what the strategy is. Because I think it's important to rehash and continue to tell to investors what is, you know, this is a 3 to 5 year strategy. It's very, very clear to scale. You know, this is not none of the things that we're doing now. And the more you find a trajectory, we can show that there's a trend line here, that there's a strategy, even if iterate and change every 3 months. You know, we will find a way to be through this platform and other more engaged and keep you giving a running commentary when we are deep in the woods doing the work. No, if Jeff or no one wants to say anything else.
No, as you rightly mentioned, that we are happy to, you know, keep on engaging in these kind of discussions, and happy to take any questions and you know, keep on responding them as we go along. We always keep one ear to the market, you know, whilst we are actually in the thick of the forest and doing these deals and everything else as well. So yeah, we commit to actually do a lot more of this hopefully going forward as well.
And we take the feedback and we reply when we can. So, you know, please keep it coming, and, you know, bear with us in terms of time. Sometimes it's not easy to respond right away, but we do incorporate the feedback and we hear the investment community.
The only thing I'd throw in would be we're excited about the future. It's palpable in the business with every meeting we do, with every visit that we now are starting to do coming out of COVID with our partners and so on. So as David said, it's great to feel the enthusiasm beyond the walls of our business. And yeah, we look forward to engaging with you much more often.
Great, thank you.
David, Nauman, Jeffrey, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, however, is of great value to the company. On behalf of the management team of EQTEC PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.